Good morning, dear students. Yes, in the yesterday's class, we had started with the introductory part of the Indian financial system. So let us just revise once and then go with the next concepts. Dear students, as all of you know, I told you that the Indian financial system, okay, it talks about how the entire financial system works. And I also told you that when you use the word financial system, it consists of various concepts. So I told you you will be having the financial assets, the financial markets, financial intermediaries, the financial rate of return. You also have financial instruments. And dear students, all of you, please keep in mind we were discussing about the financial assets in yesterday's class. I told you that the financial assets can be of two types. You can have the marketable assets, you can also have the non marketable assets. Okay. And I also told you that marketable assets are those which can be easily transferred from one person to another person. Okay. So there will not be much of a hindrance. You can easily transfer from one person to another person. And when it comes to non marketable assets, those assets or those securities cannot be easily marketed. And dear students, let me tell you that I was mentioning to you in yesterday's class that this happens to be one of the important 10 or a 15-mark question. So if you have a question on the structure of the financial system, you will have to explain about all the concepts. Okay, that means to say you have to explain about the financial assets. You will have to explain about the financial markets, intermediaries, rate of return, and instruments. So basically, the financial markets which we were discussing in yesterday's class happens to be very broad in nature. So you have to show the classifications, the subdivisions, and so on. Okay. So dear students, when it comes to financial market, I told you that wherever a financial transactions takes place, it is called as a financial system. Now, dear students, in the financial market, I told you that you have the organized market as well as the unorganized market. Now, what do you mean by the organized market? I told you that in case of an organized market, it will be having formalized rules and regulations. So, it will be following a set of rules and regulations, standardized rules and regulations will be there. And an organized market will always be under the strict regulation of RBI or any other regulatory market. And on the other hand, dear students, when it comes to the unorganized market, these unorganized markets are those which will, yeah, the unorganized markets are those markets wherein they will not be under the strict rules and regulations. They will not be having any standardized rules and regulations. For example, I told you in yesterday's class about the chit fund companies. Okay, so many private chit fund companies are there. These chit fund companies will not be under the strict rules and regulations of any regulatory bodies. Okay, and even the private money lenders. Now, even today, we have the private money lenders, dear students. They will be lending money to the general public, but they do not have any standardized rules and regulations for providing lending activities as such. So that was about the unorganized market. And dear students, I told you very clearly that this happens to be again a very important concept from your exam point of view. This is about the classification that you have under the organized market. Dear students, in the organized market, you have two subdivisions. One is called as the capital market, and the other one is the money market. So you can have questions from any of these, like they can ask you about the subdivision of the financial market as a whole, or they can be a question only on the organized market, wherein you have to classify them as the capital and the money market. And dear students, I also told you very clearly in yesterday's class that a money market is a market basically for short term securities. Okay, so which have a maturity period of less than 1 year. So from 1 day to 1 year is the maturity period of the money market instruments, and they are definitely it is for a short term funds. So I told you very clearly in yesterday's class itself that money market happens to be a market for a short term. Okay, and dear students, the transactions in the money market, basically these transactions happens over the telephonic conversation. That means to say, if you want to purchase an instrument or if you want to sell an instrument in the money market, through the telephonic conversation itself, it can happen. And I also told you that in the money market, the transactions will take place without the help of financial intermediaries. I hope you all are understanding these concepts because it's very important from your exam point of view. So, you need to know clearly what is the difference between the money and the capital market. So, dear students, in the money market, please remember you will not have a formal place like a stock exchange. So, as I told you, over the telephonic conversation itself, the buying and selling is going to take place. And then, dear students, we also started with the capital market. Of course, capital market is a market for long-term securities. As I also already mentioned to you, here the borrowing and the lending will take place for a longer period of time. That means to say it will definitely be for a longer period of time. And in the capital market, huge amount of money can be raised. I also told you that in the capital market there will be a link between the savers and the borrowers. Okay, that means to say, like if I'm having money and I want to purchase the shares of the company, I'm going to save the money. What do? I'm going to invest money in the shares of a company, and the company happens to be the borrower. That means they will collect money from me and they will be utilizing it either for the establishment of the company or for the expansion diversification activities and so on. Okay, and please keep in mind the capital market is regulated very strictly by the regulatory bodies. Okay, and the instruments here which are dealt in the capital markets are also liquid in nature. Okay, and I also told you about the importance of the capital market in yesterday's class. Okay, now I told you the differences between the money and the capital market. Dear students, as I'm again mentioning to you, this is a very important question from your exam point of view. Okay, so now when it comes to the money market, the transaction takes place for a shorter period of time, wherein the capital market, the transaction takes place for a longer period of time. And some of the instruments that are dealt in the money market are commercial papers, treasury bills, you have the certificate of deposit, trade credit. These are some of the instruments that are dealt in the money market. But when it comes to the capital market, you have shares, bonds, debentures, which will be dealt in the capital market. And dear students, please remember one more thing that you have to keep in mind is every instrument that is dealt in the money market will be of a very high value. That means to say, now if you want to purchase one treasury bill, the value of it will run into lakhs. It may be around 1 lakh, 2 lakhs, and so on. But in capital market, the instruments will not be of a very high denomination. That means to say, now see, a share may be trading even at 10 rupees, it may be trading at 100 rupees. So you can purchase how many ever shares you want according to the amount that is available with you. But in the money market, the problem is that everybody cannot afford to purchase the shares. I mean, cannot afford to purchase the money market instruments, mainly because the value of each and every instrument dealt in the money market will be of a very high denomination. Okay, you have to keep that in mind. And compared to the capital market, money market instruments are highly liquid in nature. That means to say, that means it can be easily converted into cash. Okay, then dear students, we also went to the primary market and the secondary market. One more very important concept from your exam point of view is of course the stock market. Okay, so the secondary market is nothing but the stock market, and I told you very clearly about what are the features of the stock market, and mainly the functions of the stock market happens to be one of the important concepts from your IFS point of view. So in this subject, functions of stock exchange is another important concept. I told you that only because there is a stock market, it provides liquidity to the securities. That means to say, dear students, now in case I purchase the shares of a particular company, I can always be confident that tomorrow, if I'm in need of money, I can sell that shares back, okay, by going to the stock market. So there is liquidity. I can easily get back the money money that I have invested. So that happens to be one of the biggest advantage of having the stock market. And other than that, I also told you mobilization of savings. Okay, only because there is a stock exchange, what is happening? Individuals and even business firms are able to invest their money, okay, in the shares of different companies. And dear students, I also told you that the valuation of securities will be basically done by the stock market. That means to say the prices of the securities keeps on changing on a day to day, hour to hour basis. So that valuation of the securities is the responsibility of the stock exchange. And not only that, dear students, there is security of the transactions. That means to say, I told you very clearly that SEBI, that is the Securities Exchange Board of India, happens to be the regulatory authority. So this stock exchange is going to strictly function as per the guidelines given by SEBI. And as a result of this, you can be having a peace of mind that the transactions that are traded in the stock exchange, okay, are safe because it is following the rules and regulations of SEBI. And then, dear students, remember again the stock market is the contributor to the economic growth. That means to say it is providing a platform wherein the securities of different companies can be traded. So, different companies are able to raise a huge amount of money basically because of the existence of the stock market. So companies, not only companies, the government can also think of issuing government bonds. So they can raise the money, and all this is happening basically because of the existence of the stock market. And dear students, this the investors also, they can get complete information, okay, with regard to the stock with which they are trading. Okay, and please remember it also provides investor education. Okay, one very important concept is that the stock exchange, the stock market, it plays a very important role in providing education to the people. That means to say, see, there are different bulletins that will be released through which you can get to know a lot of information. So what is happening is the stock market is providing investors education, so educating them about the shares, about the debentures and so on. And as I already mentioned to you in yesterday's class, dear students, the stock market acts as the barometer of the economy. So I was explaining to you and I told you that, see, in case we have a fever, it is through the thermometer that we will get to know what is the temperature, what is our body temperature. So how much is the fever? Okay, what is the degree of fever that we are having? You can measure that with the help of a thermometer. But when it comes to the stock market, dear students, it is the barometer of the economy. That means to say, every day when you look into, okay, the newspaper, when you look at the Sensex points, you can get to know whether the economy is actually progressing or whether it is coming down. So whether it is a recession phase or whether it is a boom phase, that can be identified by the points that has been indicated by the stock market. So, dear students, kindly give importance to the classification of the financial system. So, you have to give importance to the classification mainly under the financial markets. Okay, so it can be the organized and the unorganized market. So, under the organized market, you have the money and capital market. It is a very, very, very important concept, and you should know the differences. What is the difference between the money market and the capital market? Again, happens to be a very important aspect that you need to concentrate. Apart from that, I also told you about the stock exchange. So stock exchange also is a very important concept from your examination point of view. Okay, now dear students, after this, let us go to the next important point from your exam point of view. This is about financial institutions. Yes, dear students, financial institutions again is a very, very important aspect under the financial system. Now, when you say a financial system, it will very much include the financial institutions. It will include the banks and other financial institutions. Now, just imagine, dear students, in case if you people did not have a bank, what would you have done with the surplus money? Any money. Now let us say if you're earning 1 lakh per month, okay, just imagine if you are earning 1 lakh per month and if your expenditure for the entire month is 70,000, 30,000 rupees that you are having, if you simply keep it at home, what is going to happen? That money will definitely be 30,000 rupees only, and even a single paise will not get added to it in case you keep it in your house cupboard, right? But because of the existence of banks and other financial institutions, you will be in a position, okay, so you are able to deposit that money in the financial institutions. So please keep in mind, financial institutions are also a very important concept under the financial system. What these financial institutions are doing is they are trying to mobilize, that means to say they are trying to collect the savings of the people. Okay, now after they collect the savings of the people, they are trying to allocate them for various productive activities. So please keep in mind that financial institution also happens to be a very important concept that you need to know, okay, and it is a part of the financial system. And dear students, when you use the word financial institution, basically you have banking institutions and non-banking institutions. Okay. Now, mainly when it comes to a banking institution, all of you know very clearly. Now you have several types of banks which are existing. So you have the commercial banks, you have cooperative banks are there, foreign banks are there. So different types of banks are there. But the minute you use the word banking institution, you should keep in mind that they are under the strict rules and regulations of the Reserve Bank of India. So, any banking institution comes under the strict rules and regulations of the Reserve Bank of India. So, dear students, what is the Reserve Bank of India? Of course, it is the apex financial institution. It is going to control each and every activity of the different banks. Okay, and see, when you talk about the banking institutions, there are different types of banking institutions. Of course, you people might have heard about the commercial banks. Dear students, please keep in mind, I was telling you that you have various types of banking institutions. Under that, commercial banks is the most popular one. Okay, so all of you must be aware that, see, before 1969, all the commercial banks except the State Bank of India, all of them were in the private sector. What happened was, like during the year 1969, an initiative was made to bring all the private banks under the public sector. So during that time, what happened? Almost 14 major private sector banks were nationalized. That means to say they became the public sector banks. So now, dear students, I'm telling you about the different types of banking institutions. In this, one of the important types of banking institution is the commercial banks. Now, in the coming slides, we will be learning about the functions of commercial banks, which is also a very important question from your exam point of view. Okay, so now I'm just briefing you about the types of banking institutions. So you have commercial banks, you also have cooperative banks. Yes, dear students, I'm very sure you people might have heard about the cooperative banks. Okay, So when you talk about the cooperative banks, it is a group of societies which is being registered under the act. Okay. Now, cooperative societies are basically meant for providing either credit. Okay, so they provide credit societies are there, non-credit societies are there. I think you people must have heard about the rural credit societies, urban credit societies. Okay, so they are basically for providing of okay. See, dear students, now when you talk about financial institutions, you basically have banking institutions and non-banking financial institutions. Okay. Now, in the banking institutions, you have different types. That means to say you have commercial banks, you will be having the cooperative banks. Okay. You will see when you talk about these commercial banks, they are the banks which are basically providing the banking activities. Now see, whenever you people want to deposit money, you go to a commercial bank. Whenever you want to get a loan, you go to a commercial bank. Okay, and these banks, whether it is a commercial bank, a cooperative bank, any of the banks are completely under the strict rules and regulations of the Reserve Bank of India. Dear students, when it comes to cooperative banks are those banks which are mainly concerned with providing agricultural credit. Okay, and then you have regional rural banks. Dear students, regional rural banks are also called as the RRB. Why do you think you have the regional rural banks? Now, as the name itself indicates, now see, there can be 5 mark questions on what do you mean by regional rural bank, what do you mean by cooperative banks, and so on. Now, whenever you use the word regional rural bank, please keep in mind if any country has to develop, it is not just sufficient if the urban area develops. Even the rural area has to develop simultaneously. Only then it means to say that the entire country is going to develop. So when you talk about the regional rural banks, dear students, the regional rural banks provides banking facilities and credit to farmers and entrepreneurs in the rural area. So please keep that in mind. Okay. So the regional rural banks have been mainly set up with the intention of providing financial assistance to the people in which area? In the rural area. Okay. So the farmers will be able to get loans and financial assistance from this regional rural banks. And dear students, you might have also heard about the foreign banks. So, foreign banks are also a classification under the banking institutions. Now, dear students, when you talk about foreign banks, okay, now these foreign banks have been in India from the time of the British period. So, from the time the British were in India, even from those days, foreign banks are there in India. Now, foreign banks are the banks that have branches in other countries, but their headquarters is in the home country. Okay, like see, these foreign banks are nothing but now. Let us say you might have heard about the City Bank, the Bank of Ceylon. Now, these are some of the foreign banks which have their headquarters in the home country. That means these banks might have been established in the foreign country, but they set up their branch here. Like for example, they set up their branch in India in order to carry out the banking transactions. Okay, so please keep in mind, dear students, foreign banks again are a part of the banking institutions. So, as I told you, foreign banks have been there in India from the time the foreigners were in existence. Okay, that is, even from that period of time, these foreign banks are in existence in our country. Okay, and see, some of the examples are Citibank is there. You have the HSBC Bank is there. Then the Barclays Bank is there. You have the Bank of America. DBS Bank is there. These are some of the foreign banks which are operating in India. Okay, but they will be having their headquarters in the home country, but they will be set up their branches and they will be carrying out the activities. Okay, now dear students, now any of the banks, now I told you that, see, whether it is a commercial bank, whether it is a cooperative bank, whether it is a regional rural bank, or whether it is a foreign bank, the minute you use the word bank, it means to say they are under the strict supervision of the uh, Reserve Bank of India. Okay, I told you about the cooperative banks also. Okay, there are almost 31 cooperative banks in India. Okay, and they try to provide a lot of facilities, and I told you regional rural banks are basically meant for providing credit to the people in the rural areas. I also told you about the foreign banks. These foreign banks play a very important role. And as I mentioned to you, it may be the Citibank, the Barclays Bank, they will be having their head office in the home country, but they set up the branches in the other countries for carrying out their activities. Okay. Now, dear students, coming to another very, very important concept. Now, see, for your 5 marks in the examination, you can expect questions relating to some of these banks which I'm mentioning to you right now. See, I think you people have heard about the Industrial Development Bank of India. Okay, so IDBI, which is called as the Industrial Development Bank of India. See, you have IDBI, you have IFCI, you have State Finance Corporation, you have LIC. Now, these are some of the financial institutions which are playing a very important role in the economic development of our country. Now, what your people should keep in mind here is, dear students, please remember these financial institutions, any of these financial institutions can be asked for 5 marks. Okay, now I was telling you about the Industrial Development Bank of India. Dear students, it is very clearly given in the study material. Okay, and let me also tell you, IDBI was established in the year 1st of July 1964. Okay, so basically it was established in the year 1964, and it was, of course, established by the government of India. Okay, but then when you look at this Industrial Development Bank of India, as the name itself indicates, dear students, it is for the development of industries. Now, in case you get a 5 mark question on any of these financial institutions, you will have to mention these points, okay, and try to give a brief explanation. Now, in the Industrial Development Bank of India, it is an apex institution for providing long-term financial assistance to the industrial sector. Yes, dear students, as I already mentioned to you, in the name itself, you can find out that the word industrial development means to say these institution or this institution mainly plays an important role for the development of industries. Now, how is it helping in the development of industries? Yes, it is providing long term financial assistance to the industrial sector. Dear students, all of you, please keep in mind industries are considered as the backbone of the Indian economy. Although agriculture may be the main occupation of the Indian economy, still, when you talk about industries, they are the backbone of our Indian economy. So if your country should progress, they should not just be agricultural development, but you should also have industrial development. So, for the purpose of this industrial development, these banks are playing a very important role. Now, see, to set up an industry, it is definitely not easy. Now, for setting up of an industry, huge amount of funds will be required. So, this particular bank, Industrial Development Bank of India, which was established in 1964, is playing a very important role in providing financial assistance for setting up of industries. It also provides long term loans for the industries. Okay, so you know that once it is an industry, definitely they will require huge amount of money, okay, for carrying out the activities, and that long term financial assistance will be provided by IDBI. It also helps in the development of industries. Yes, dear students, you know that financial assistance is very much essential for the industries. Okay, not only for setting up of the industry. Now, let us say for promoting the products of the industries. Again, you have to think about developing their industries. So these industries can definitely come and approach IDBI, which will be definitely very curious on providing financial assistance to them. Not only that, look at the next assistance, dear students. IDBI invest in the shares of industrial establishments. What does it mean? Now, I told you, and I've always been telling you, that whenever an industry or a company has to be established, they will require huge amount of money. Now, when they need that huge amount of money, what an industry can do? Of course, they can borrow money from a bank. On the other hand, they can also think of issuing shares. When they issue the shares need not be purchased only by the individuals, but it can also be purchased by some establishments. Now, IDBI also happens to be one of the financial institution, and this institution will take up the responsibility of investing in the shares. Now, what is this IDBI doing? When they invest in the shares of any industry, that industry will be getting the money, and that is how they are supporting or they are providing financial assistance to those industries. Not only that, dear students, IDBI guarantees the loan obtained by the industries. Okay, now let us say one particular industry has to be established. Okay, now that industry will go and approach a particular bank for loan. So when they want to obtain loan, you know that today what is compulsory? They need a guarantor. They need somebody to sign as a guarantor. So IDBI will also provide guarantee to whatever loans will be obtained from the industries. Okay, so that is the nature of IDBI. Okay, so it is playing a very important role in providing financial assistance, and it is also purchasing the shares of the companies. It is also providing a guarantee for the loans that these industries are obtaining. Not only that, dear students, IDBI also provides administrative and technical assistance. That means to say, now let us say you have established an industry. Now you are not having sufficient guidance with regard to administering that particular industry. You need some assistance from IDBI. They will definitely provide you assistance with regard to administration, or if you want any technical support, even that will be provided by IDBI. Not only that, IDBI is also conducting research and survey for the development of industries. That means to say, every now and then IDBI will also think of conducting a research, and they will try to conduct a survey to find out whether, okay, what is required for the development of industries in the country, okay, and which all banks are providing financial assistance. Is that sufficient for the development of industries in the country? To find out that, they conduct a research and survey. Okay, I hope you people are understanding. Now, there can also be a 5 mark question about Industrial Finance Corporation of India. Okay, so you people must have heard of this Industrial Finance Corporation of India, which is popularly called as IFCI. So for 5 marks, again, you can also expect a question on this, or there can be a 10-mark question considering all IDBI, IFCI, SFC, etc. Okay. Now, dear students, Industrial Finance Corporation of India was established in the year 1948. Now, again, as the name itself indicates, industrial finance means to say what? It means to say that it is basically established for providing financial assistance for the industrial sector. And dear students, IFCI is playing a very important role in providing medium term as well as long term credit requirements, okay, for the industrial sector. So they are trying to provide not only medium term support but also long term support. Now, here, if you can see here in this particular slide, IFCI plays an important role in providing medium and long term financial assistance not only to the industrial but also for the manufacturing sector. And then, dear students, as I told you, just like IDBI, IFCI also subscribes. So subscribes is nothing but they are going to purchase the shares and debentures. Okay. Now, if any industrial establishment issues the shares, okay, so IFCI can make up its mind and they can also think of, purchasing the shares or the debentures that are issued by those industries. So, by purchasing the shares and debentures, IFCI is providing financial assistance indirectly to those industrial establishments. Not only that, just like IDBI, dear students, IFCI also guarantees the loans that are taken up by industrial establishments. Okay, just now I was mentioning to you. So whenever industries needs to borrow loan from any of the banks, they will have to provide a guarantee. So just think of this, IFCI also provides a guarantee to whatever loans have been taken by the industrial establishments. Not only that, the next point is important, dear students. IFCI takes up the responsibility of underwriting of shares. This is an important point. What do you mean by this underwriting of shares? Dear students, this is a very important term. So the meaning of the term underwriting. Now, why does IFCI think about underwriting, and what do you mean by underwriting of shares? Now, let us assume that one particular industry, just a minute. Yes. Now let us say one particular industry is thinking of issuing shares. Now, when one particular industry thinks of issuing the shares to the public, please remember it has to, okay, a certain percentage of shares should be compulsorily purchased by the public. Okay, so in case a certain percentage of shares is not purchased by the public, then they cannot think of establishing their industry. So, underwriting is the minimum subscription that has to be made by the general public. That means the minimum amount of shares that has to be purchased by the general public. Otherwise, the industry cannot be established. Now, let us say the general public have not purchased so many shares. Then what happens? It will be a big worry for the industries as to how exactly it can be established. During that time, IFCI will take up the responsibility of purchasing those shares which are not purchased by the general public so that the minimum subscription of shares can take place. And dear students, just like IDBI, IFCI also take up the responsibility of not only providing financial assistance, but they also provide technical and administrative assistance. Now, when an industry thinks about expansion, when they think about promotion, when they think about diversification, for all those activities also, if you need any type of a guidance as an industry, they can approach the IFCI, which will provide them with a lot of advices, because it is not just only money that is required for an industrial establishment, dear students. They will will need a lot of technical and administrative support. Guidance is required by them. Okay. The then, coming to the next institution, it is the State Finance Corporation of India, which will be shortly called as the SFC. Okay, so the State Finance Corporation of India, dear students, it is again a very important institution which is playing a very important role in bringing about a balanced regional development. What is this balanced regional development? As I told you, dear students, it is not just important that the industries are set up only in the rural, in the urban area. So the industrial establishments also has to be set up in the rural areas also. Okay, so that means to say only if there is, industrial development both in the urban and the rural areas, only then you can say that industrial development is taking place in a balanced manner. Okay, so dear students, say when it comes to the State Finance Corporation, please keep in mind the State Finance Corporation also plays a very important role in providing loans. Now, for what type of loans do they provide for the development? Is that they provide loans for purchase of fixed asset. Now you know very clearly huge amount of money will be required, okay, for purchasing of land, for purchasing of a building, for purchasing of machinery. Okay, see, especially SFCs or plays a very important role for promoting small and medium industries in the state. Okay, so what they are doing is, now let us say if any small scale industry has to be set up, they need some financial assistance for purchasing a building or for purchasing a land to set up their industry. Definitely SFC will be there to assist them. Okay, and dear students, it provides a lot of financial assistance for the medium and small scale industries. It again takes up the responsibility of underwriting of shares, which I already explained to you. It also provides a guarantee. Okay, this is one of the very important functions that are played by some of these institutions. So what they are doing is they guarantee whatever loans have been provided. Okay, to different industries. And dear students, one more institution which plays a very important role in our economy is the Unit Trust of India. Dear students, this Unit Trust of India began its operation almost in the year 1964. It is very popularly called as UTI. Okay, I think you people have heard of UTI. So UTI is nothing but the Unit Trust of India. Now, this Unit Trust of India, dear students, what is the role played by UTI? It provides an opportunity for the small savers to invest money in the areas where the risk can be diversified. That means you might have heard about mutual funds, dear students. See, this Unit Trust of India was the most popular mutual fund establishment. Okay, and also see, it has started long way back in 1964. What this UTI was doing is, now let us say you people have 10,000 rupees with you. Now you can deposit that 10,000 rupees with the Unit Trust of India. Now, when you deposit that money, what that UTI is going to do is that 10,000 rupees, they are going to invest that 10,000 rupees in the units of various companies. Now, see, if you invest 10,000 only in one company, what may happen? If that company makes a loss, you will have to make a loss. But instead of that, what UTI does is your 10,000 rupees that they have taken from you, they will be allocating that money among different companies so that even though some companies make a loss, there will definitely be some more companies which will be making a profit. So people who have small amount of savings, they can think of saving their money through mutual funds. Okay, and once you invest money in the mutual fund company, that is in the, for example in the UTI, uh, or in any other company. Now you will be called as a unit holder. Okay. So dear students, please keep in mind UTI played a very, very important role in mobilizing the savings of the investors. What do you mean by mobilizing the savings? It is nothing but collecting the savings. Okay. Now you know very clearly that when people were very, very popular for investing money only in post office deposits or in bank deposits. But once this UTI became popular, people started, investing their money even in the Unit Trust of India. So, what UTI did, it played a very important role in mobilizing or in collecting the savings of the investors. Okay, so what it will do, it will channelize the savings into productive investment. That's what I'm telling you. So, this 10,000 rupees that you are going to invest, or whatever money you're going to deposit with this UTI, they are going to invest that money into different companies. So what is UTI actually doing? UTI is encouraging savings habits among the low and the middle income group of the society. Yes, that was the biggest contribution that was made by UTI, dear students. See, just because UTI was there, lakhs and lakhs of people who had small amount of money, the middle income group of people, the low income group of people, they started, okay, they started, okay, that is depositing their money. And also UTI ensures liquidity of units. Okay, so dear students, liquidity is nothing but, I think you people have heard about open ended funds. Even today mutual funds companies are providing this open ended schemes. Okay, now that means to say you deposit money, so you will be called as the unit holder. So once you are called as a unit holder, it means that you are holding the units of the particular company. So what will happen is, whenever you want to sell back the units, you can do it very easily. It is not at all a problem. So if you, but of course there will be slight variations based on the market. Okay, what happens is, the money that you have invested can slightly increase or it can slightly go down. But that is why it is always advisable for you to go in for long term investment decisions. So dear students, because of UTI, okay, it is encouraging savings habits among the low and the middle income class of the society. And it is also encouraged liquidity. So whenever you need, you can think of, getting your money back by redeeming. Today the word redemption is used, so you can redeem the units. So UTI, okay, of course, so please keep in mind, you have the separate, fund management companies, and UTI is one of the best one. Okay, which has come into operation from 1964. So the intention of having UTI was to mobilize the savings of the public. And of course, dear students, I think all of you have heard about this mammoth organization, the Life Insurance Corporation of India. Yes. See, LIC, the Life Insurance Corporation of India, please keep in mind, happens to be the biggest, it is the monopoly in having life insurance business in the public sector. So this Life Insurance Corporation of India, dear students, was established on 1st of September 1956. Okay, so actually more than 245 insurance companies were merged to create a state-owned life insurance corporation in India. Okay. Now this LIC, which is very popular among the people from time immemorial, it is a very, very popular name. So whenever you think of insurance, and particularly whenever you think of life insurance, people think of going to LIC, because it is of course a government organization, and of course it is state owned. People have a lot of confidence in the Life Insurance Corporation of India. Now what did this LIC do? LIC again collects the savings of the people through life insurance policy, and they try to invest that money in the financial market. Of course, dear students, you must be knowing a lot of schemes are available with the LIC. Okay, now different schemes will be introduced by LIC from time to time, and you know that you can. There are several whole life policies will be there, endowment policies will be there. So every now and then there are new schemes also which will be introduced by LIC. So their main intention is again They want to collect the savings of the people, okay? And after collecting the savings of the people, they will try to invest that money in the financial market. And dear students, also invest money in the government securities, okay? See, please keep in mind, every now and then government can also issue securities, and once you use the word government security, you know that it is very, very secure because it is in the hands of the government. Now, LIC also takes up the responsibility of investing funds in the government securities. So, what is happening? Government is getting money, and also LIC is helping, okay, the government to raise money. Then LIC issues policies to the people at an affordable rate. Yes, that is one thing which is very great. Okay, so it is not that only the rich people can invest money in the life insurance corporation. No, so there are so many schemes, there are so many policies. Okay, that has been built in by LIC, wherein even the low income section of the society, the middle income section of the society, we can think of purchasing different policies of LIC, which will be at a very affordable money. Okay. And then, dear students, LIC also provides loan to the industries. Okay. So this also you need to keep in mind. So they are providing loans to the industries at an affordable rate of interest, and LIC is one of the major stakeholders in the stock market. Yes, dear students. Okay, see, it is almost called as a mammoth. Okay, it is the, as I already told you. So the monopoly, okay, the complete control of the life insurance business in the public sector is held by the LIC. So I told you that the main advantage is that it is trying to collect the savings of the people, and then it is also playing a very important role in issuing different policies to the people, and that too at an affordable rate. Okay, very small amount of money you can think of depositing, okay, in this LIC, so it is affordable. It also provides loan to some of the national projects. Okay, now let us say there are some projects which are of national importance. You know that these projects are very essential for the economic development of our country. Okay, so whenever there are any such projects, okay, LIC is playing a very important role in providing loans to such projects. And LIC acts as a channel between savings and investment of the people in India. Yes, of course, LIC is a channel. Okay, so it is playing a very important role in acting as a channel or as a middleman between the savers and the investors. Okay, that is also another important point that you people should keep in mind. Okay, so these are again some of the points that you may have to write under LIC, Life Insurance Corporation of India. Okay, and of course, you people might have heard about the General Insurance Corporation also. Yes. Okay. Now, again, talking about the General Insurance Corporation of India. So, please keep in mind the General Insurance Corporation of India, it carries out the general insurance business. That means to say, once you say life insurance, it means it is talking about the providing of insurance policies pertaining only to life. But the General Insurance Corporation of India, it provides insurance with regard to vehicle insurance, it may be with regard to health insurance or theft insurance, burglary insurance. Okay, so wherever you talk about all these, so these insurance policies will be provided, of course, by the General Insurance Corporation of India. And of course you have four big general insurance corporations in the public sector. One is the National Insurance Company Limited, you have the New India Assurance Company Limited, you have Oriental Insurance Company Limited, you also have United Insurance Company Limited. Okay. Then, dear students, apart from LIC, GIC, IDBI, IFCI, you also have one more very, very important institution, which is called as the State Industrial Development Corporation. Now, what does the State Industrial Development Corporation do? Of course, it was again established in the year 1995, okay, under the Companies Act of 1956. What are the functions of the State Industrial Development Corporation? The first one is the State Industrial Development Corporation plays a major role in bringing industrial development in various states. Now, as the name itself indicates, it is called a state industrial, so it is playing a major role in the development of industries in the various states of the country. Then SIDC, that is the State Industrial Development Corporation, plays an important role in the issue of loans. Okay, so that is again this SIDC plays an important role in providing loans to the industrial sector and basically in the different states. And SIDC plays a vital role in promotional programs like entrepreneurial training. Now, let us say one individual wants to establish an enterprise. Now, when he wants to establish an enterprise, definitely it is not a joke, because he should know how much money is required. He should also know how much of what is the administrative knowledge he has to have. So he has to have the technical skills. So for all this, what happens? You will need some programs that has to be organized. So SIDC is playing a very important role wherein it will carry out promotional programs, okay, like providing of entrepreneurial training. Okay, that is again another important thing. Then SIDC procures raw materials and makes them available for the small scale industries at a lesser rate. Now again, what SIDC is doing is, now if there is any scarce raw materials, okay, so if these there is scarcity, or if there is a shortage of raw materials, what SIDC does is it will purchase these raw materials either from the domestic or the international market, and it will make it available to the small industries, okay, as per the requirements. Not only that, SIDC plays an important role in solving the working capital requirements. Very, very important, aspect, dear students. See, State Industrial Development Corporation, it provides important finance for meeting working capital requirement. What is that, dear students? A working capital requirement is the money that is required for meeting the day-to-day expenditure. Okay, now let us say you have a very small scale industry for carrying out the day-to-day activities. Now let us say you have to pay wages to the workers, you have to pay the telephonic bill, you have to purchase the raw materials, you have to pay for the transportation expenses. Now all those are called as the working capital. Okay, so that money that is required for carrying out the day-to-day activities of the business is called as the working capital money. Now, SIDC plays an important role in solving this working capital requirements of various industries. So that means to say they will provide the money to these small scale industries for carrying out the day-to-day activities. Not only that, dear students, SIDC plays a very important role to support those units that have been run by women entrepreneurs. Now, you know very clearly, women entrepreneurship is becoming very popular. That means women are trying to become entrepreneurs and they need a lot of support. Okay, it may be financial support, it may be technical support. So, to provide all that support for the women entrepreneurs, State Industrial Development Corporation is playing a very important role. And dear students, this SIDC also has set up many skill development centers. Okay, now what is the skill development centers? Now because SIDC has set up the skill development centers, workers are trained with various skills. Okay, of course, skill is something which people need today. So SIDC has set up many skill development centers so that the workers are well trained and they will get the required amount of knowledge and skills to carry out the activities. And not only that, dear students, State Industrial Development Corporation has also developed a website. Okay, and this website will provide advertisement relating to the products that are manufactured by the industries. Now you know very clearly. See, once you are an industry, let us say you have manufactured certain products. It is not just important that you manufacture those products. Okay, but you should also be in a position. Okay, after manufacturing, marketing of those products is very important. Now if you want to market those products, what has to be done? There should be a lot of advertisements. So SIDC will play a very important role in developing websites so that the products that are manufactured by the industries can be advertised well, and so that even in the foreign market there will be a demand for the products that have been manufactured by our Indian industries. Okay, so dear students, I hope you are understanding. So this is again an important role that is played by SIDC. Then, dear students, have you heard about the Exim Bank? Yes, I'm very sure that all of you have heard about the Exim Bank, which is also called as the Export Import Bank of India. Yes, dear students, see, this is again an important question for 5 marks. You can have a question on, write a short note on the Exim Bank of India. Okay, of course, Exim Bank is nothing but the Export Import Bank of India. It was established in the year 1982. Okay, so Exim Bank is a principal financial institution established in India for easing of foreign and international trade. So this Exim Bank is basically established taking in view trade activities. Okay, because Exim, as I told you, it talks about export and import. Yes, of course, the Exim Bank established in 1982. What is the objectives of having this Exim Bank? It provides financial assistance for the import and export of goods and services in India. Okay, all of you know, importing is buying of goods from the other country, exporting is selling of goods to the other country. So you know very clearly now, dear students, we will be able to earn a huge amount of revenue when we export our goods to the other country. Now, let us say, you people must be knowing very clearly, India is a country very, very popular for spices. Okay. Now, this Indian spices, whenever you people think of exporting these spices, so you will be able to get a huge amount of revenue. So don't you think that there should be a bank which will take care of this export and import? Yes, definitely there is a bank, and that is the Exim Bank. So the Exim Bank is providing financial assistance for the import and export of goods and services in India, and it provides finance for import and export of machinery on lease as well as hire purchase basis. Okay, so now whenever you are thinking about purchasing the goods from the like, let us say you need a heavy machinery, you want to import a heavy machinery from the foreign country. Now what will happen? Huge amount of funds is required for that. So, who is going to help you? The Exim Bank will play a very important role in providing financial assistance. Not only that, dear students, it also provides refinance facilities. What is this refinance facilities to the banks which are involved in foreign trade? Now, let us say there is one particular bank which has provided finance for foreign trade. Now, if one particular bank has provided financial assistance for the foreign trade activities, so this Exim Bank will in turn provide loans to the banks which are helping in foreign trade. So that is called as refinance activities. So one bank A, if it is providing loan for export or for import activities, Exim Bank will try to provide loan to A because it is actually automatically or directly or indirectly helping in the import and export of goods. Not only that, dear students, it also provides technical and other assistance to the importers and exporters. Okay, please keep that in mind. So you know that the importers and the exporters will need some technical assistance. Okay, that is also provided by this Exim Bank. Exim Bank also takes up the responsibility of underwriting of shares and debentures. I already told you, okay, the meaning of the word underwriting. So even the responsibility of underwriting of shares and debentures will be taken over by the Exim Bank, and it offers short-term loans to the foreign banks and also to the government. And dear students, Exim Bank is also providing advisory services to the exporters. See, advisory services is very, very important. Now, when you want to export goods to the other country, there are so many procedures that are involved, formalities that are involved. Not only that, you can think of improving the exports. Okay, you can increase the exports of the goods to the other country, but you will need some advice. And who is going to provide that advice? That advice will be provided by the Exim Bank. And then, dear students, you also have another very important institution which is called as a SIDBI, very popularly called as SIDBI. So it is nothing but the Small Industrial Development Bank of India, and it is more popularly called as the SIDBI. And this SIDBI mainly concentrates on MSME sector. What is this MSME sector? Micro, small, and medium enterprises. Okay, so you have the micro, small, and medium enterprises. So for providing of financial assistance to this micro, small, and medium enterprises, you have this SIDBI. Okay, now, dear students, please remember this MSME happens to be one of the backbone of the Indian economy because it comprises of the micro enterprises, it comprises of the small business enterprises, it also consists of the medium enterprises. Okay. Now, these institutions will require a lot of financial assistance. Okay. Now, to provide financial assistance, SIDBI is playing a very important role, and it also helps in marketing of various products. That is the plus point of having SIDBI. What SIDBI does is, now these micro enterprises or small enterprises, let us say they have manufactured some products. Even though they have manufactured some products, it is very important for them to market the products. Okay, so when they want to market the products, you know that you will need some type of help. So SIDBI plays a very important role in marketing the products that have been produced by micro, small, as well as medium enterprises. Okay. And dear students, SIDBI checks the financial health of bank to provide financial assistance to small units. That means to say, now see, there are various banks which will be providing financial assistance for micro, small, and medium enterprises. So these banks should be having sufficient amounts of funds in order to help the micro, small, and medium enterprises. So SIDBI will try to have an eye on the banks, okay, to see to that they are financially sound, they are financially stable in order to provide financial assistance to the micro, small, and medium enterprises. Okay, and then SIDBI is also providing venture capital assistance. I think you people have heard about the venture capital financing. That is, let us say there is an innovative venture. You want to start an innovative venture. So, if you want to start something which is innovative, you will need some financial assistance. So, SIDBI also plays a very important role in providing venture capital financing. Okay, and SIDBI provides financial assistance again for meeting the working capital requirements of MSME. Now, I told you that micro, small, and medium enterprises, they also need lot of money for carrying out the day-to-day activities. So the money that is required for meeting the day-to-day activities is called as working capital, and for that money also SIDBI plays a very important role in providing that money. Dear students, please remember Without finance, none of the enterprises can survive. Okay, so just imagine if you're having a micro enterprise, if you're having a small enterprise, if you're having a medium enterprise, you will have to have lot of finance with you. And if you don't have finance, these are the institutions which are providing help to you. Okay, so this is about SIDBI. Okay, it is helping in providing not only long-term financial assistance, but it is also providing the working capital finance. So, dear students, all of you, please keep in mind it can be IDBI, it can be IFCI, it can be SFC, it can be SIDBI, UTI, LIC. Any of these can be asked under 5 marks. Okay, so you need to know what are the functions performed by these institutions. So, I mean, all together combined can also be asked for a question. Okay, so I hope all of you understood about the different institutions. Now next, going to the next important concept, dear students, all of you, please keep in mind this commercial banking system. It is a separate unit. You have unit 4 in your first block, and this unit 4 under the first block, dear students, has a concept about commercial banks. Commercial banks, you can always expect a 10 or a 15-mark question on commercial banking. Okay, so please pay attention to this topic. It's very important from your examination point of view. So coming to the commercial banks, so commercial banks, yes. Now all of us know about a commercial bank, right? First of all, you know that banks occupy a very important position in the modern economy. Okay, so without a bank, you cannot think about savings. Without a bank, you cannot think about trade activities. You cannot think about agriculture. No industries can survive without banking. Banking is the very important, component of the financial system. Dear students, when it comes to a commercial bank, what do you mean by a commercial bank? First of all, yes, of course, it is a profit seeking firm, okay? And it mainly deals with money. Once you use the word bank, it means dealing with money. And there are different definitions that have been given about commercial banks. There is one popular saying given by Professor R.S. Sayers. He says commercial banks are the institutions whose debts, usually referred to as bank deposits, are accepted in final settlement of other people's debts. Okay, so this is one of the famous saying which is given by Professor Sayers. Okay, now I will tell you about more about the banking system, commercial banking system. But first of all of you remember there is one topic called as functions of commercial banks. It is very very important from your examination point of view. Okay. Let us start. Now, I already told you a commercial bank happens to be a profit seeking business firm. It mainly deals with money, and all of you again know very clearly that commercial banks are of course under the control of the Reserve Bank of India. So RBI happens to be, the apex institution which is controlling all the commercial banks in our country. Now coming to the functions of the commercial banks, dear students, commercial banks plays a very important role in the economic life of a country. What do you mean by economic? Economic means to say it deals with money. So when you say the economic situation of a country, when you use that word, so definitely banks will be playing a very important role. Now, dear students, going to a very important concept. This is about the functions of commercial banks, which happens to be a very, very important concept from your examination point of view. Okay, just wait for 2 minutes. I'll just get back. Yes. So now, talking about the functions of the commercial banks, the first primary functions. Okay, now you, dear students, first of all, the functions of commercial banks can be classified into two types. One is called as the primary function. The next one is called as the secondary function. Now, starting with the primary functions of commercial banks. Dear students, you have four main classifications under primary functions of a commercial banks. What are those? You have receiving of deposits, lending of loans, lending of funds, investment of funds on securities. You also have creation of money. But dear students, under each of these primary functions, you have to write a lot under this. Now, as I told you, this happens to be one of the questions which can very frequently be asked in the examination. So what your people can do is that you can draw a chart. Now whenever possible in the examination, if you want to score more marks, try to make use of diagrammatic representation. For example, if there is a question on the functions of commercial bank, you can always draw a chart and you can show the primary functions, and under primary functions what all you have. Then you can again draw another chart which shows about the secondary function. So when you make use of diagrammatic representations, you will be in a position to give a better representation in the examination. So now, as I was telling you, under the primary functions, you have receiving of deposits, lending of funds, investment of funds, and creation of money. Now, let us start with the first point, receiving of deposits. Yes, dear students, all of you know very clearly that commercial banks play a very important role in receiving deposits. Okay, so now what your people should keep in mind is that whenever you have some money with you, what you generally do is, from time immemorial, people think that investing or depositing money with the bank happens to be one of the safest. Yes, dear students, because when you use the word bank itself means to say there is some type of a security. So what people do is, when they have any type of money which is lying idle with them, that means to say they earn some amount of money, they have their expenditure done, and after meeting their expenditure, if they have some amount of money remaining with them, okay, what they will do, they will think of, okay, that is saving that money. Now how can you save the money? You can save the money by depositing it in the form of different types of accounts. Now dear students, you have different types of accounts. Okay, you have current account, savings bank account, fixed deposit account, and also recurring deposit account. Now, dear students, all of you, please keep in mind that these are the different types of accounts that you are having, and you should definitely know about each of these accounts, and you should also write about each of these accounts. Okay, whenever there is a question about functions of commercial banks. Now, dear students, the first one is the current account. All of you, please keep in mind, current account happens to be one of the most important type of deposit. Okay, but current account cannot be opened by everyone. Current account is an account which will be always opened by businessmen. Okay, why? Because you know that for some business person, there will be thousands of transactions which he has to carry out every day. So when he has to carry out that is transactions, so many thousands of transactions every day, what will happen? He has to have an account. So current account is one of the important types of bank accounts, and this is mainly meant for businessmen, that you need to keep in mind. So current account will allow you to carry out the transactions how many ever number of times you want. Okay, so what will happen in current account is, he can deposit any amount of money and he can try to withdraw money as many times as is required. That is why current account is opened by a businessman, you know that throughout the day he'll be having a lot of transactions. He may be depositing money, he may be again, okay, withdrawing the money. So he can withdraw or deposit money any number of times if he has a current account. So all of you, please keep in mind that basically a current account is opened by a businessman, a business establishment, but it cannot be opened by the general public. Okay. And of course, dear students, coming to the savings bank account, it is one of the most popular type of deposit account which all of us know. Okay, so savings bank account is basically opened by the middle and lower income part of the society. Okay, now as I was telling you, now let us say if I have 20,000 rupees with me, and in case I want to save this money, as I told you, idle cash cannot multiply by itself. Rather than that, if I think of opening a savings bank account, I will be getting a fixed percentage of interest. And not only that, it is also encouraging savings habits among the middle and also the lower income group of the society. So savings bank account can be opened by the middle, the low income group, the high income group of the society. Of course, all of us will be having a savings bank account. And the main intention of having a savings bank account, dear students, is to encourage the savings habits among the depositors. Now, as I was telling you from the first class itself, see, if we don't have a bank, if we did not have the savings bank account, definitely none of us would have thought about saving our money, right? So that is why, to encourage the saving habits. And you also know very clearly that you can also go and withdraw money whatever is there in your savings bank account. Okay, whenever you are in need of money, definitely during the banking hours you can go and withdraw money from the savings bank account. Or on the other hand, of course, today you know that ATM, okay, is also another way by which you can withdraw money from your savings bank account. Of course, as I told you, dear students, keep in mind, under the primary functions of the commercial banks, you have the first point, that is receiving of deposits. Under receiving of deposits, you have different types of account. So you have current account and you also have the savings bank account. The next one is, of course, the fixed deposit accounts. Okay. Now, dear students, as the name itself indicates, fixed means it will be there in the account for a certain number of years. Fixed deposit accounts are opened by small investors who do not want to invest their money in risky securities. Okay. Now let us say I'm having 5 lakh rupees with me. I can definitely think of investing this money in the shares. But let us say I am a person who does not want to take more of risk. Now you know that once you talk about the share market, the risk will obviously be there, right? So when whenever I purchase the shares of a particular company, I will always be having a fear as to what may happen to that money, whether it can increase or whether it is going to decrease or what may happen. So that is why when I am having a fear to invest money, a huge amount of money in any type of a shares or securities, I can always think of depositing this money as a fixed deposit. You know, dear students, that fixed deposit accounts will definitely have a fixed maturity period. Okay, that means to say, if I have 5 lakh rupees with me and if I want to invest in a FD account with 5 years time period, so you know that this 5 lakh rupees will be deposited by me. It will have a maturity period of 5 years, and of course it will also be giving me a fixed rate of interest every year. Okay. Now, dear students, same money in these accounts is deposited for a fixed period of time and cannot be withdrawn before the expiry of the period of time. The interest on this account is higher than any type of account. Of course, you should be knowing that in case of this fixed deposit account, the rate of interest that the customer gets will be very high. Why? Because there is a lock in period. Now, dear students, keep in mind that whatever money that we deposit in the fixed deposit account will be of a huge benefit for a bank. Okay, how is it very beneficial for the bank? I will tell you when I'm like telling the next points. So as of now, you know that fixed deposit accounts will have a fixed maturity period. It will be giving a fixed interest to the investors. Okay, it is also a very popular account. Now, coming to the next type of account, dear students, the RD. Okay, it is popularly called as RD, that is the recurring deposit account. Dear students, the purpose of these accounts is again to encourage regular savings by the customers. Okay, so RD is again an account to encourage savings habits, but to encourage regular savings. Okay, the word regular is very important here. Why? Because in case of this RD account, what happens is that a fixed amount of money should be deposited by you every month into the bank. Now, let us say you feel that you are capable of depositing 4,000 rupees into the bank every month. So, every month, the same amount of money has to be deposited by you into the RD account. See, if it is a savings deposit account, you know that one month you can put 2,000, one more day you go put 3,000, 4,000. It's according to your will and wish. But in the RD account, you should deposit a same amount of money in monthly installments into the bank, and it is for a fixed period of time. Okay, even an RD account will have a fixed maturity period, and the amount will be repaid to the depositor along with the interest on the maturity. Now, as I told you, now the RD account can be for 1 year, 2 year, according to whatever is convenient for you. You can take that type of an RD account. So here again, the intention is to encourage regular. Why regular? Because you're anyway going to compulsorily deposit the same amount of money every month. So you are regularly saving the money. The period for which the recurring deposit accounts are opened, of course, it can vary from 1 year to 10 years, as I told you, according to your convenience. If you feel that you can deposit this money for a period of 1 year, you can go in for 1 year deposit account. If you feel for 5 years you're convenient, you can go with that. Okay, according to your wish. Okay, and according to your convenience and your ability to save. Now, dear students, I hope you're understanding. So, I told you that one of the primary functions of a commercial bank is accepting of deposit. And I told you that under accepting of deposit, you have the savings account, you have the fixed deposit account, recurring deposit account is there, and you also have the current account. Current account is mainly for the businessmen or for the business establishments. Okay. Now, dear students, let us go to the next very important function of a commercial bank, that is lending of funds, of course. Okay, so it is here that the banks will be in a position to earn a very good percentage of returns. Now, dear students, lending of funds is another very important, function that is carried out by the commercial banks. What do they do? Dear students, I think your people have heard about loans, right? So, what is this loan? Now, a loan is a financial arrangement. We are talking about the second point, which is lending of funds. So, under that, you have a first sub point called loan. A loan is a financial arrangement under which an advance is granted by a bank to the borrower in a separate account called as a loan account. Okay, so what happens, I think you people know that in case you want to obtain a loan from a bank, you people approach the bank, they will ask you for certain documents, and on submitting that particular document, they will see whether you are eligible for that loan, whether you are having the credit worthiness to repay the loan. All that they will find out, and then they will think of providing you a loan. Of course, a separate account called as a loan account will be opened. When a loan is sanctioned to the borrower, the entire amount of loan, okay, will be put to the loan account of the borrower, and of course the entire lump sum money the borrower is going to take, and he can repay that money in the form of equated monthly installment, which is also called as EMI. Now, dear students, all of you should keep in mind that, see, I was telling you about the importance of this fixed deposit account. Now, let us say I am going to deposit 10 lakh rupees with a bank, okay, with a bank for a period of 5 years. Now, what the bank is going to do is this 10 lakh rupees which I've deposited with the bank for the period of 5 years, bank knows that before 5 years I cannot withdraw that 10 lakh rupees. Bank knows very well. So what bank will do? They will take that 10 lakh rupees and they will give it in the form of a loan to the others. Okay. Now there will be people who are in need of loan. How will they provide that loan? They can provide loan mainly out of the fixed deposit money that I have kept in a bank in the form of fixed deposit. Why? Because they know that they have a maturity period. Until that maturity period, the person who has deposited money in the FD will not go is not going to take back the money. So that money will be used by the bank to provide loans to the customers. So the loan will be given to them in one lump sum, and then the repayment will be made by them in monthly, I mean in equated monthly installments. Okay. So under lending of funds, you have loans, which is a very important point. The next point is you have overdraft. Dear students, please keep in mind, an overdraft is a financial arrangement under which a current account holder. So, overdraft facility is provided only to the current account holder, which means to say, who can have a current account? Only the business people, right? So, the overdraft facility will be provided to the current account holder, wherein he can draw the money over and above what is there in his account. Now, let us say I am a businessman. I have 10 lakh rupees in the account, but I need 10 lakh 10,000 rupees. Okay. So I need 10,000 extra. That 10,000 is not there in my account, but I have a current account with a particular bank. I need 10 lakh 10,000 rupees. So the bank will provide me 10 lakh 10,000 rupees because it is a current account holder. They will provide me 10,000 rupees, although it is not there in my account. They will provide me that arrangement. Okay, and overdraft is a temporary financial accommodation. Okay, that means to say it is a temporary arrangement made because I am a business person. They know that every day I will be carrying out hundreds of transactions. So with that belief, they are going to provide me a overdraft facility. I can withdraw money over and above the amount that I have in my current account. Okay, and then interest is charged. Definitely they will not give me this money freely, although they are going to give me 10,000 rupees extra. That 10,000 rupees will have to be repaid by me as a current account holder, but there will be some percentage of interest that will be charged for the overdrawing of money. I hope you understood. So, dear students, please remember under lending of funds, the first thing is about loans. I told you, and I also told you you have the overdraft facility. In case of the overdraft facility, which is provided for the current account holders, they can draw the money over and above what is in the current account. And when they overdraw money, it will be for a short period of time. They have to repay that money along with interest. Then, dear students, you have another arrangement called as cash credit. What is this cash credit? It is a type of loan which is given to the borrower against his current asset. Okay. So what is this cash credit? It means to say it is a loan which will be given by a bank to the customer, and he has to take this loan against his current assets. Okay. And such loan are not based on personal security, but he has to pledge his current assets. A separate account called as a cash credit account is opened in the name of the customer, and for a specific limit, they will provide you the cash credit so you can make use of that money. A cash credit account is like a current account, a running account from which money can be withdrawn and money can be deposited. So, cash credit happens to be another financial arrangement made by the bank wherein a person who wishes to borrow money can borrow money, but it should be against the security of his current assets, okay, like stocks, bonds, etc. And dear students, the banks also provide a facility called as discounting of bills. This is again a very important point. What is this discounting of bill? Discounting of bill is an arrangement under which the bank takes a bills of exchange maturing within a period of 60 days and 90 days and pays it. Now let us say there is a financial arrangement wherein now I have purchased goods from Mr. A. Okay. Now I have purchased goods from Mr. A, and a bill of exchange will be drawn. Now in that bill of exchange, what will happen is it will be an agreement, and I would have mentioned that I have purchased the goods worth rupees 30,000 rupees. This 30,000 rupees will be paid back by me on or before 30th of April. Okay, so a bill of exchange has been drawn because I want to purchase goods from Mr. A, but I don't have 30,000 rupees with me immediately. So I will get into an agreement with Mr. A who is selling the goods, and a bill of exchange will be drawn. Now, in the bill of exchange, it will be mentioned that I am going to repay the money, that is 30,000 rupees, on or before such and such a date. Now, let us assume 30th of April 2023. Now, let us say Mr. A has accepted the bill of exchange, and he knows that he has to wait till 30th of April in case he wants to get the money. But what Mr. A can do is he can go and get the bill discounted with the banker. So what bank will do is, now see, if Mr. A has to wait for that bill of exchange, he has to wait till 30th of April. So instead of that, if he goes and gets the bill discounted, rather than giving 30,000 rupees, the bank may deduct some amount of money, and he can pay him 27,000 or 28,000 rupees to him. Okay, so what Mr. A was able to do, although he was not able to get the entire 30,000 rupees before 30th of April, he can go and get that bill discounted. So the bank may hold around 1,000 or 2,000 rupees, okay, but it will be giving him 28,000 rupees before April 30th. So this is called as a discounting of bill arrangement. Okay, and this arrangement, now see Mr. A, if he is in immediate need of money, rather than waiting till April 30th, he can definitely get the bill discounted with the bank. That happens to be another facility which is provided by commercial banks. And other than that, you have investment of funds on securities. Your students are not only providing loans and advances, commercial banks also invest a part of the surplus fund. Okay, what commercial banks do is, even they will be having some surplus amount of money with them. That surplus amount of money they will also invest in government securities. They will also invest in industrial securities. Okay, so commercial banks invest a considerable amount of their funds in government and industrial securities. Okay, so in India, commercial banks are required by the statute to invest a portion. That means to say, commercial banks will not only think of receiving deposits, lending money. Not only that, they will also think of as I told you, they will make investment in government securities and industrial securities. That is again another function which will be performed by the commercial banks. Okay. And apart from that, there is one more important function, creation of money. Okay. That is called as credit creation. This also happens to be another very important function that is performed by the commercial banks. What is this credit creation? A unique function of the commercial banks is to create credit. In fact, credit creation is an outcome of the process of advancing loan adopted by the banks. Whenever a bank advances a loan to the customer, it does not lend cash but opens an account in the borrower's name, right? So what a bank does, whenever it has to provide loans, okay, to the a customer, they will generally open an account in the borrower's name and credit the entire amount of loan to this account. Thus, whenever a bank grants a loan, it creates an equal amount of bank deposits. Creation of such deposit is called as credit creation. Okay, so please remember, this is nothing but any bank, whenever it thinks of providing loans to the customers, what it will do is it is going to create an account, right? So that amount of loan will be deposited to the account. So as more number of accounts get created, it means to say that the transactions are happening and the banking system will also develop. Now, dear students, going to the next important function, you have the secondary function. Now, under the primary function, you have accepting of deposits and lending of loans. But when it comes to the secondary functions of commercial banks, you have agency functions and general utility functions. Dear students, please remember, under agency function, bank performs a number of agency functions on behalf of the customers. Okay, now if you are a customer of a particular bank, then as a customer you can think of taking agency functions from the bank. For example, remittance of funds. What is this remittance of funds? Dear students, long ago it was so difficult. If we want to remit, that is, if we want to transfer money to one person, it used to be so difficult, right? But today, banks within seconds, they are helping you to remit the money, to transfer the money from your account to the account of a person to whom you need to pay the money. So please remember, under agency function, one very important function of a commercial bank is remittance of funds. That means to say, transferring money from your account to the account of a person in whose name you want to remit the money. Then collection and payment of credit instruments. Okay, banks pay and collect various instruments. Yes, of course. See, now in case you have to deposit a check or you have a promissory note, a bill of exchange, all these instruments will be dealt with the bank. You need not break your head. Okay, so what you can do, whatever checks you want, you can deposit it in the bank. The bank will take care of getting the money that is in the account of your in your check. Okay, so those transactions will also be carried out. And also some standing orders, execution of standing orders. That means to say, now let us assume that every month you have to pay rent to a person. Okay, or let us say every month you want to pay insurance premium to the insurance company. So rather than you breaking your head, okay, and let us say you are a very busy person, you're not having sufficient time to make payment of these rent, or it can be insurance premium. If you give instructions to the commercial bank itself will take over the responsibility of payment of premium. Every month you need not worry, because on time, on that specific date, whatever amount you have to pay in the form of insurance premium, that will be paid by the commercial banks on your behalf. Not only that, purchasing and sale of securities. Okay, banks undertake purchase and sale of securities like shares, bonds, debentures on behalf of their customers. Now, dear students, even in case you people want to purchase or sell any securities, you need not yourself break your head to do that. Rather than that, you can transfer that responsibility to the commercial banks. Of course, they are going to charge some fees for carrying out these activities, but definitely your burden will be reduced. Why? Because commercial banks will take over the responsibility of purchasing of shares, okay, on behalf of the customers. Of course, some service charges will be charged by them. And collecting of dividend. Now, dear students, let us say you people have invested in the shares of a particular company. Whenever the company makes a profit, definitely they will be distributing the profit in the form of dividend. Okay, now, commercial bank will take up the responsibility of collecting the dividends. Okay, and not only that, income tax consultancies. Now, let us say you people have to pay income tax every year, so you want an expert's advice. So in case you need an expert advice, you can definitely contact the commercial banks, because the banks also have income tax experts. So with the help of the income tax experts, they will help the customers for filing their income tax returns. Okay. And then acts as a representative and correspondent. That means to say, if you want to get your passport, if you want to get a traveler's ticket. Now let us assume you want to travel abroad. Okay. So you want to get the traveler's ticket. So if you want to get the ticket, or if you want to get the passport, or if you want to book a vehicle, you want to book a plot, okay, in your name, all that can be vested to the commercial banks. They will take up the responsibility of doing all these activities, okay, and they will be charging some service charges, okay. And then general utility functions, okay. Now apart from this agency functions, the banks will also be performing general utility functions. Which are the general utility functions? Like locker facilities. You know very clearly, banks provide locker facilities, right? See, whenever you people think of, you're having a lot of jewelry or ornaments with you, let us say, if you keep it in your money, you will always have a fear that there may be theft, okay, it may be stolen by someone. So but on the other hand, if you keep it in security with a bank, definitely the banker will keep it in a safe locker. So your ornaments, not only your ornaments, even the documents. Now you may be having some very important document, your house documents, or it may be some other property documents. Definitely, now in case you keep it at home, and if you have not safely kept it, what will happen? It may be I mean, what to say, damaged, okay. So those documents may really get damaged. Or let us say, if it is an ornament, you will always have a fear in your mind whether it is safe in your cupboard or not, okay. Because of theft, there may be chances of being stolen away. So that is why it is very good in case you can take the help of locker facilities, okay. So banks will keep all your valuables very safely, but you have to just pay them some service charges, okay. And not only that, I told you travelers check, okay. So if you want to travel, okay, from one place to another place, so travelers check will be issued to you. That means to say, see, if you carry huge amount of cash with you when you're traveling from one place to the other place, there may be chances that that money that you're carrying, okay, it may be stolen by someone. So in order to avoid that, you can think of taking this traveler's check from the bank, so that the customer need not take the risk of carrying huge amount of cash with them, okay. And dear students, the banks also takes up the responsibility of issuing letter of credit, okay. See, I think you people have heard about a letter of credit. It is very important in foreign trade, okay. So what is this letter of credit? Now assume that you are importing goods from some country, okay. You are importing one machinery from Germany, let us say. Now when you're importing money from Germany, and you have told the person in Germany that I'm going to pay the money to you, okay, within such and such a period of time. So first of all, the person in that foreign country, he should know whether you are credit worthy or not. In order to know whether you are credit worthy or not, the bank will issue a letter of credit. So with the help of this letter of credit, you will be in a position to obtain the goods from the other country, because they will believe you, and they will give the goods to you, and the money can be paid by you on a later stage. And banks also collect statistics, okay. Please keep in mind, banks are playing a very important role. They are trying to collect statistics about the industries, about trade and commerce, and even about banking. You know, every now and then journals and bulletins, okay, will be published by the banks. It will have complete information about the trade activities, industrial activities, banking activities in the country. And not only that, so banks also help in, commercial banks also help in underwriting of securities. As I told you, underwriting is nothing but, in case a certain percentage of shares is not being purchased by the general public, that can be definitely purchased by banks, okay. So bank takes up the responsibility of underwriting of securities, okay. Then dear students, you also have some modern functions which are performed by the banks. it can be with regard to underwriting, or it can be with regard to factoring services. Now, see about this factoring and all, I will be telling you when we go to the topic on factoring. Okay, and also lease financing will be provided to these customers. Apart from that, some high-tech banking facilities. Okay, now dear students, you know about the high-tech banking facilities. Imagine today, within a click of buttons, you can carry out e-commerce, right? Electronic commerce. You want to order a goods, okay, product from Flipkart. You want to order a product from Amazon. You can immediately, with the click of the button, order the product that you want. You can make the payment immediately, and the next day itself, the product is at your doorstep. So it shows that only because of the commercial banks who are in a position to carry out e-commerce. What is this e-commerce? Electronic commerce, and also thanks to the credit and debit cards that the commercial banks are providing, right? So see now every, if you just imagine if you did not have a debit and a credit card, okay? See a debit card now. Assume that your people wanted money urgently, and of course you want that money, let us say at 8 o'clock in the evening. You know that banks will definitely not be open during only during the banking hours you can think of withdrawing money. But let us say at 8 p.m you're in urgent need of money. So with the help of your debit card, you can always withdraw money from the automated teller machine. Thanks to that, not only that, you people can purchase goods with the help of debit cards and credit cards. Okay, so you can make your dream come true. You can purchase goods, you can purchase clothings, electronic appliances. All these you are able to purchase mainly because of the debit and credit cards. Okay, so internet banking is happening, mobile banking. Okay, just see the way in which innovation is helping you. Now it is not just internet banking, even through your mobile phones you are able to carry out the banking transactions also. Okay, so you can transfer money from one person to another, right? And see now, look at the phone pay arrangements, or it may be Google Pay. All these, okay, within click of a button the transactions are happening, okay, thanks to the commercial banks. So electronic fund transfer is happening. All these high tech banking facilities which are provided by the banks are really a very big boon to us. So we are able to carry out transactions so very quickly because of the commercial banks. Okay, now dear students, after telling about all this, let me tell you what is the importance of commercial banks. Yes, dear students, commercial banks play a very important role in providing financial assistance for the development of trade and commerce. So as all of you know that commercial banks is providing financial assistance, okay, for the short term, medium term and long term financial assistance they are providing. They provide loans for the agricultural sector. You know that agriculture is the backbone of our economy, right? So what commercial banks are doing, they are providing loans to the farmers. Okay, farmers are in a position in order to take finance from banks. Not only the commercial banks are providing loans to the agricultural sector, but they're also providing financial assistance for the industrial sector. Okay, and then commercial banks are providing, they're playing a very important role in the economic development of our country, right? And then they play a crucial role in capital formation. They provide funds for setting up of some projects. Now let us say you want to set up an industry, you can always approach the commercial banks. And then they help in the transfer of funds. It's a very very important function played by the commercial banks, dear students. Transfer of funds from one place to another place is happening, and trade and commerce is developing mainly because of the commercial banks. So huge amount of finance is provided, okay, for the development of transportation facilities, and commercial banks are helping in safe keeping your money. So as I already told you, if you want the locker facilities will be provided by the banks. Okay, so you can think of safely keeping your money, or you can also safely keep your documents, your ornaments, any valuables that you need, you can keep it with the commercial banks. And commercial banks are helping the customers by providing financial assistance for construction and renovation of houses. Yes, dear students, now you know very clearly it is not easy for all of us to purchase a house. Okay, See, they are providing housing loans. If you want to purchase a land or a site, you can do that by obtaining loan from the commercial banks. Again, you people can think of, buying a house. So that also they are providing you loans. So commercial banks are helping us. Okay, and they are also providing financial assistance to the government. Okay, so that is banks are providing financial assistance for the government to carry out development activities. Hmm? And also they increase the savings of the people. Right now, I told you how fixed deposit account is playing a very important role for the banks for providing loans to the others. So just because one person is able to keep a fixed deposit with the bank, that money can be utilized by the bank for providing loans to some other person. So the economic prosperity of our country, dear students, depends on the sound functioning of the commercial banks. So please keep in mind that commercial banks are playing a very, very important role, and they are seeing to that, it is helping in the economic development of the country. So commercial banks are under the control of the Reserve Bank of India. Of course, they are following the strict rules and regulations of the Reserve Bank of India. Of course, without the commercial banks, it would not have been possible for agricultural development. It would not have been possible for industrial development. And we also couldn't have thought about any type of making of any type of savings or obtaining of any type of loans would not have been possible. Okay, so this is about the commercial banks. Okay, just a minute. Okay, so this is about the role of commercial banks. Now, let us go to the next topic. Yes. Dear students, the next topic is, of course, from the next block. It is about the investment policy of commercial banks. Okay. I hope you all are understanding whatever I'm telling you. So now we are going to the second block. It is about the investment policy of commercial banks. Now, in this investment policy of commercial banks, we are going to learn about what is liquidity, what do you mean by profitability, and things like that. Okay. Just a minute, the slide is uploading. Yes. Now, let us see about the concept of bank portfolio management. Dear students, the primary aim of any commercial bank, as I already told you, is to earn profit. The ability of a bank to earn profit depends upon the investment policy. Okay. So the investment policy depends upon the way in which it manages its portfolio. Now, dear students, whenever a bank thinks about portfolio management, I'll tell you what is this portfolio management in detail in tomorrow's class. But as of now, please keep in mind safety, liquidity, and profitability. These three concepts are very important for any bank. Okay, that is providing of safety, providing of liquidity, and earning sufficient profitability. Dear students, when it comes to safety and security, please remember now, as a customer, when I go and deposit money with the bank, what is the responsibility of the bank? It is the responsibility of the bank to provide safety of the money that I have deposited with it. The money deposited by the customer should be kept very safe, and it should be given back whenever it is demanded by the customer. Okay. So the bank should ensure that the money kept by the customer should not be misused by the bank. Okay, you know that whenever I go and deposit any money with any of the banks, my intention will be that whenever there is a time, I can withdraw that money back. Whenever I'm in need of money, I must be able to withdraw that money from that particular bank. So, what your people should keep in mind is the bank should not misuse the money of the customers. Okay. Yes, dear students, you're having 12 units. All the 12 units are important for the examination. Don't try to skip any of the units because the questions can come from any of the units. Okay. It is the responsibility of the banker to ensure that whatever money is kept in the form of deposit by the customers has to be kept safe, and it should be returned by the bank whenever it is demanded by the customers. And dear students, liquidity of funds is again a very, very important point. What is liquidity? Liquidity is nothing but easy convertibility into cash. Now, let us say, as I told you, 1 month back, you have deposited 50,000 with the bank. Today, you want back the money, you're in urgent need of money. You go to the bank during the banking hours and you write a withdrawal slip and give it to them. Now, the bank should be in a position to give back the money to you immediately. Okay, only then you will rely on that particular bank. So, providing liquidity also happens to be one of the important functions of the commercial banks. Thank you, dear students. I will continue it in tomorrow's class.